Bitcoin caught up in a macro-driven sell-off may fall further. Standard Chartered there is a danger that forced or panic selling could lead to further Bitcoin weakness, and a break below $90,000 could lead to a 10% retracement. The report said.By Will Canny, edited by Parikshit Mishra, January 15, 2025, 11:04 a.m. UTC. Bitcoin, BTC, and other digital assets have dropped as part of a wider macro-driven sell-off in the market, and there is a risk that forced selling could lead to further weakness. Investment bank Standard Chartered said in a report on Monday. The market downturn was triggered by Federal Reserve Chairman Jerome Powell's hawkish press conference in mid-December. Powered by 00:09/44:0310110.9K2 Bitcoin mining in the Nordics W /Jaran Mellerud. STLP0 fill. Hashtag FF3E5F. .st1 fill. Hashtag FEF.st2 fill. Hashtag FF3E5F. Share.clsx. 1. Isolation. Isolate. .clsx. 2. Fill. Hashtag FF3E5F. .clsx. 3. Fill. Hashtag FFF. NextStayThe bank noted that investors who took on Bitcoin exposure after the U.S. election in November are now only breaking even, and there is a risk that forced or panic selling could add to the sell-off. This includes exchange-traded fund, ETF, buyers and BTC acquirer MicroStrategy, MSTR. The risk of mark-to-market pain is building, wrote Geoff Kendrick, head of digital assets research at Standard Chartered. If the world's largest cryptocurrency breaks below the key $90,000 level, it could retrace 10% lower to the low $80,000s, the report said, and other digital assets would also likely fall. The bank advises adding Bitcoin once the retracement is over. Standard Chartered still expects Bitcoin to hit $200,000 by the end of the year, fueled by the resumption of institutional inflows under the new Trump administration. Read more. Bitcoin bull Tom Lee sees BTC reaching as high as $250,000 by year-end.